My name is Fred Murimi. I'm the managing partner for Centum Capital Partners. Centum is the private equity arm. Centum Capital Partners, the private equity arm for Centum Group. So we are responsible for making all the investments by Centum into the private companies that Centum is invested in. We've been very active the last 10 years in particular, and have delivered a very good return for Centum in that time. In that time, we've invested in several companies across several sectors: financial services, consumer goods, manufacturing, lately education, agriculture as well. For this session, what I'd like to just speak about is GenAfrica, what was then known as Genesis Investment Management Limited. We invested in this business in the year 2013, December 2013. It was interesting how the opportunity came to us. It's one of those opportunities that came to us at the 11th hour. There was going to be a board meeting of the board of Genesis Kenya, as it then was, to consider a new shareholder in the business, as a parent company. Genesis from London was exiting. As we came to learn later, the reason the parent was exiting was because for them seated in London, the increased activity of Genesis Kenya was creating more risk for them in London. And given just the size of our markets and the increased need for oversight, the risk return profile was not matching for the parent company. So they had made a decision they were going to exit as a controlling shareholder, and they had begun a process where they're going to be looking for suitors to come in and take control of the business. So we literally learned of the opportunity the day before the meeting. It actually went to our group CEO. We were able to move very quickly, get internal approvals. James sent our offer, I think at midnight. The next morning we had someone deliver a physical offer, and as we later came to learn, we upset everything that had been planned, because they had already identified who was going to come in as the controlling shareholder. So we put in an offer. It was thankfully considered to be quite competitive, and they then put us on a track to then do our due diligence, because we had not done any due diligence on the business, and then negotiate shareholding agreements and acquisition of shares, which we were then able to complete quite fast. So looking at the original need for this business, they had grown principally from a research house where they're doing research for the parent company in London. They then began managing some funds, some third-party funds, some pension funds, and they actually did quite well. And the management of the third-party funds was actually incidental to what they were set up for the research. So as they continued to grow, the increasing risk that was being presented to the parent company was putting them in an uncomfortable position, so there was some constraint on their growth. And so when we came in, amongst the first things we did was identified what are the growth areas for this business, and how do we as the controlling shareholder support the business. And so they identified two primary areas for growth. One was geographical diversification. So it was principally a Kenyan business, and they're looking to grow out into the East African region. Second was product diversification. So they'd only been doing fund management, pension fund management, and they were looking to put out new products, property management, an income drawdown, where basically pensioners are able to invest their pension and then draw down income over time. They were also looking to do wealth management as well. So outside of pension and pensioners, also just private individuals looking to have their money or their wealth managed. And so we then we looked at each of these areas, and we came up together with management with a very clear 5-year plan. And from there, then we let the management go, and they fired along quite well. By the time we were exiting the business, just about 4.5 years later, between December 2013 and say June 2017, the assets under management of this business had grown from 96 billion shillings to 200 billion shillings, so more than 100% growth in assets under management, which was quite a feat. At the time when we were coming in, there was of course concern around the parent company is leaving, and we are managing people's money, which is quite sensitive, and the clients were asking, is our money safe? And a number of them were of course looking to withdraw to a more safe manager. But through interactions between management, ourselves as shareholder, just giving them assurance that even though the parent company you knew is leaving, you've got a strong local institutional partner coming in who is backing the management, and you're going to have a very smooth transition. And that's exactly what happened. Thankfully, we didn't lose any client because of that transition. And like I'm mentioning, 4.5 years later, the assets under management more than doubled. So that transition was very smooth, and our clients really bought into this is now a strong local institution, which is growing. Even its controlling shareholder is here local, understands us, is able to evaluate the risks of operating this region much better. And that is, I think, what fueled the growth in the business. By the time we were exiting, we had also grown into Uganda as well, and we had quite a bit of assets under management coming from Uganda. By the time we were exiting, we were also just about to open an office in Tanzania. So you can see the strategy that we set at the beginning, and just allowing management to do their thing. And because the targets were agreed, there wasn't confusion as they're executing their strategy as to whether can we do this, can we not do this. They were very clear. We already have the backing of the shareholder, and so they moved, and they did quite well for the business, of course for us as shareholders, but also importantly for the customers. The customers also enjoyed very good returns in this period. So I think for me the highlight in GenAfrica was just being able to transition from a multinational parent company to a strong local institution, have a very smooth transition, being able to retain all the clients and the assets under management, even winning new mandates, being able to diversify into new products, going to new geographies, I think really is a testament of what Centum was able to bring as a shareholder in this new business. And even as we exited, even in that process, we made sure that the new incoming shareholder was going to continue in the same trajectory that we had set the business at. And the last time I checked, the assets under management continue to grow. So our coming in, our leaving has not been disruptive to the business. Actually, the business has been able to grow over that period. There's a fantastic management team we found there, headed by Charles Ogalo, who was the CEO at the time. We had Patrick Kariuki as well as the CEO, and that's a team that we worked with throughout our time there. So we didn't bring in new external management into the business. We worked with the same team because they already had the ideas. They knew what they wanted to do. They knew where they wanted the business to go, and ours was just to empower them, give them some wind in their sails, and really push them to move. So as far as the management was concerned, we had a very good relationship with them. We backed them in every decision as well. Some of the value adds that we brought in as a shareholder, in addition to what I've mentioned, is because we're here, we're local, we have got very good relationships. So we're able to win new mandates because of some of the relationships that Centum has locally. Also just areas around regulatory issues, because it's a highly regulated business, managing people's money. And many times just working with regulators, giving them assurances, they know who we are. And just that assurance that we're able to provide, we also have our own connections with the regulators. And so we really helped management to focus on their business of managing people's money and growing. And we took care of a lot of the external risk factors, and also mitigated those. So yeah, that's our story of GenAfrica. Got a very good return for Centum. Yeah, and it's one of our success stories at Centum. When we took over Genesis Kenya, as it then was, one of the requirements from the exiting parent company, Genesis, was that the business rebrands and drops the name Genesis, because that was their name and they were leaving the business. And so they gave us 2 years to change the brand identity as well as the logo. So it may have seemed like a fairly easy process, but remember, because we're also managing people's money, we didn't want to rush the change in the brand identity. We needed to give our customers the sense that this is a smooth transition, nothing is changing, if anything possibly getting better. So we didn't want to rush into it. So there's quite a bit of sensitivity around changing the brand identity. So within Centum, part of our shared services team includes a marketing division. And when we felt we were ready to now undertake the brand identity change, at the board level at Genesis Kenya, we then called for expressions of interest from different marketing agencies to work with us through this journey and to give us their proposals. So our own team here at Centum Business Solutions also made a pitch as well. I was on the board, but I excused myself because of the obvious conflict. And quite independently, the board of Genesis Kenya then actually settled on Centum Business Solutions as the marketing agency to drive the change in brand identity. So we then began the journey with Centum Business Solutions, looking at what were the strengths of Genesis Kenya as it then was, what were some of the things that customers liked about the business, what were they hoping would change. And so we went through a very rigorous process just to ensure that we are carrying the management, the customers with us, even as we go through this transition. And so some of it was just striking a very delicate balance, and eventually the board made decisions, say, around the name, for instance. So we wanted to keep the Genesis in some form without keeping the real name Genesis. But then we also had ambitions for creating an Africa platform, an Africa company. And that's how then the name GenAfrica came up. We also had to change the logo, and then so playing around with the different logos, testing that with management, testing it with customers to see what really spoke to them. There was also the issue of color as well, what colors will be associated with the business. And so just putting all this together, we did that in a fairly quick period of time, well ahead of the 2-year deadline that had been given by the leaving parent company at the time. And and that transition was actually quite smooth. Like I mentioned earlier, we didn't lose any clients through the process. We didn't even lose the management as well, because sometimes management is also tied to a certain brand, to a certain parent company. But throughout that process, just handling it with a lot of sensitivity, but also just showing that the opportunities were bigger. So we're moving from Genesis Kenyan company to GenAfrica. We're now becoming an Africa vehicle. And I think that transition actually worked quite well. And again, kudos to the team here at Centum Business Solutions. They drove that process quite well. They were the most competitive by far, even when matched against other well-known agencies. And again, that's just part of the value add that Centum is able to bring into the businesses that we are in. So the principal thing at board level is giving direction, because you want that once you start moving, when management is coming to work every day, they're very clear on what direction they need to move in, and they're not questioning themselves, or they start making a move and they're pulled back by the board. So just giving a company direction. So being very clear, and we had certain strategic pillars for this business. One was around the asset growth, the assets under management, and that was going to be done by increasing the share of receipts that were coming from existing clients and retaining those clients, because every month because it's pension money, every month there was new money being received. So just by retaining those clients, it was already going to be a big win. The second then was winning new mandates. So part of it then was just ensuring that anytime there's a prospective pension scheme looking for a new manager, we are there on the table. Where we have relationships, then we make sure that we bring those relationships to bear. The third area was on product diversification. We ourselves at Centum had already some experience in some of the areas that the business was looking to grow. So in the area of property, we had been there already. So just sharing with them our experiences, this is what works, this, you can try this, was something else that we added value on. As far as geographical diversification is concerned also, we had relationships in Uganda, so just helping them with the ropes around setting up in Uganda was something that we're able to do. So once we were very clear on each of these pillars and then setting targets, that is principally at the board level, that is the most important thing for any board to be able to do, to have everyone clear about what are the things that when the management comes every day that they're doing. And once they start on that journey, not pulling them back. So just allowing them to move because the plan is already clear. And so for every business that we go in, we always set a 5-year plan. Because then to be able to get a business moving in a certain direction, many times businesses fail not because of lack of strategy, but because of execution. So just allowing businesses to execute because the plan is clear, I think was the biggest value add for us as a board. Once that was set, then now the next was now just about monitoring the performance of the business. And like I'm saying, there was a very good management team there. So on many of the metrics that we set, the key targets, they executed very well. Where there were variances, mainly either because there's an obstacle or a door needs to be opened, then that's where we would come in at the board level, see what relationships we can bring. I think the other one to mention is also then at board level, the caliber of members that we are able to bring onto the board was also very important for the business. Because of course, once the parent company left, they also left with their directors. So we're able to bring in a new board, which was very well networked in the market, and just to be able to support the business through that plan. And interestingly, even as we left, as Centum left the business, and the new shareholder was coming in, there was actually a request that we retain, that the business retains the new directors that we had brought, which I guess was testament to the value that the business had seen in those directors, and that's just part of what we were able to do. We get very many calls, very many ideas coming our way, very many opportunities. So on average, on any given day, there'll be at least one opportunity coming our way. What's important for us is being absolutely clear on what is a compelling opportunity, where can we add value in that opportunity, and what is the return. To be able to make that evaluation fairly quickly, because these opportunities are coming to us almost on a daily basis. We need to be very clear about different sectors, what are the opportunities in different sectors, where are the constraints, where Centum, if we came in a certain opportunity in a given sector, where could we unlock value. So for us, we are constantly researching, constantly getting in touch with the market, just to hear what's going on. So that when an opportunity comes, we already have formed a view, even prior to the opportunity. So yes, the opportunities come to us, but not every opportunity that comes to us is either credible in terms of that the return is going to be generated, or two, that we might not be the right partner to come in and add value on an opportunity. In this case of GenAfrica, we could see that we could add value because we were here, we were local, we had a fairly good understanding of the risks, we could manage the risks here in the market, we could see the growth opportunities as well, and so we thought we were the right partner, and indeed the growth that we expected to see came through.